Good evening, everybody, and welcome to Redefine's annual results. In terms of our usual format, I'll just take you through a brief introduction, and then Andrew and David will take you through the detail. Okay, so just what we are, as I think most of you know, it's a listed JSE property loan stock company managing a diverse range of property assets exceeding 30 billion. Our unit price at year end was R9.60, and we make up 15% of the total of the market cap of the sector, and our total return to investors for the year to 31st of August was 30%. Our corporate structure has been simplified. We have our direct property portfolio, we have our listed securities portfolio. Since year end, the stake in Oryx has been disposed of. We have a small direct stake in Cromwell Property Group, was increased slightly. Redefine International, subsequent to their capital raise, we've now reduced our holding in RIN to 49, just over 49%. So the good news is in the coming year we don't have to consolidate, and our accounts will be a lot simpler and easier to understand. We have 76% of Redefine International fund managers as at year end, but that will shortly be increased to 90%. So from a Redefine point of view, why should you invest in us? We've got attractive real yields. There's a good prospect of capital appreciation. We have a high visibility of earnings, a diversified portfolio. We've substantially improved the quality of that portfolio. We do very limited speculative development. We're geographically diversified in the main into Gauteng, KwaZulu-Natal and the Western Cape. There's an element of rand hedge. We've got a proven management team which is being strengthened all the time, and there's no longer much reliance on fee and trading income. We say property is our commodity, but people is our business or our business. We, during the year, adopted values by our entire team and all of our staff. We've got commitments and values, and that's something which we're focusing on to make it happen. The highlights of 2012, final distribution of 32.5 cents in line with market expectation and previous guidance. Our recurring core income was up 7.2%. We've made significant strides in delivering on our strategic objectives. As I said earlier, the quality of our property portfolio has improved substantially. The average value per property has increased from 50 million to 80. Funding costs have been lowered through participation in the debt capital markets. We purchased the Fountainhead Manco. We've offered to acquire the Fountainhead assets. I'm sure there'll be lots of questions. We'll deal with that a bit later. And Redefine International has had a very successful capital raise and restructuring of its legacy debt. But Redefine has had a very quiet year. Okay, just looking at some of those things. There was the Fountainhead transaction. We bought some land in Cornubia. We bought the 50% in South Coast Mall, 50% of Chris Harney, the Discovery Building in Sandton. We disposed of our whole bunch of properties, 98 properties to Arrowhead. We did the deal with Arrow Creek on our trading properties. We purchased 50% of Dawn. We purchased the General Motors assembly plant. We purchased the Implats head office in Fricker Road. We did our deal with Zenprop. In addition to that, we are busy with two grassroots developments for Joshua Doe and Moorsport. We completed the Pepcore distribution centre very successfully. We refurbished Park Meadows, Scottsville Mall, Essex Gardens, Riverside Mall, all of which have contributed positively or will do in the new year. On our funding side, we had some equity raised. We went to the debt capital markets. We've sold Depula and Oryx. So quite a quiet year. From an international side, there was a capital raising in Cromwell, which we participated in, and that Andrew will deal with, has been very, very successful for us. And on the Redefine International side, the debt restructure and the capital raise has also gone very well. So as I say, we unbundled the 98 non-core properties. We acquired 3 billion of other properties. The average value went up. The number of properties reduced locally from 358 to 253. And happy to announce today, if you haven't seen the announcement, that after a large and very competitive tender process, we were the successful bidder for the East Rand Mall from Sanlam, and we are accommodating Vukile, who had a preemptive right to take up a 50% undivided share in that. That's a 2.2 billion acquisition for 100%. We think it's a fantastic asset, and our fee and trading income as a percentage of total distributions has been significantly reduced. We focused a lot on our property management to grow income and lower operating costs. We developed the redefined brand strategy, redefining relationships, and our positioning statement is we are not landlords, we're people. It's also translated into internal values and behaviors and launched to our staff. We've created a customer relations management department to make the business more customer-centric, and the property management structure has been revised to create a specialist management focus. The take-on of the Fountainhead property management has begun on a phased approach, and it will probably take us 8 to 12 months to integrate that properly, and we think we'll make a difference there as well. Our strategic review of our investments in listed securities to transform Redefine from a hybrid into a pure property play. There is a realization strategy for Hyprop in place to maximize the unlocking of the value. We've also obviously got capital gains tax issues. Hopefully some of that will be alleviated by the losses which we already have, and also with the advent of REITs. Our equity loans in Dipula were monetized, and an entire holding in Oryx was sold for 184 million subsequent to year end. Management of local debt. We've broadened our funding sources to the debt capital market very successfully. We've renegotiated some of our expensive debt, and we raised 650 million through an accelerated book build at a very tight discount to the price at the time. We've had real growth in international markets at low capital volatility. Redefine International raised equity of 127.5 million. It was originally planned at 100. They got over 130 and cut it back. Our Redefine International holding has been reduced to 49.3%, so we'll be deconsolidated. 250 million of Redefine International's legacy funding has been restructured. We've expanded our offshore exposure through a direct investment in Cromwell, and would look to increase that in the future, and increased our interest in Redefine International fund managers to 90%. Ability to execute value-adding development and corporate opportunities. We've always said this is something we're very good at. We're very good at adding value. So we've exited the speculative developments and reduced our dependence on speculative non-trading lumpy income. But just to give you some idea there of the things we did, Pepcore, for example, we had a building which was worth originally about 150 million. We spent 290 million on it, and in terms of the latest valuation, there's an uplift of 142 million. Park Meadows, which was 339 million, we spent 34. There's a 34 million uplift in valuation, and similarly with Jewel City, on a 34 million rand spend, we got a 43 million uplift in the valuation. So this is something which we continue to do. David will expand on it more, but it's something which we do very, very well. None of this would have been achievable without the support of my exco, our staff, and everybody else who's involved. So I just want to thank them all for their total commitment to Redefine, and I have no doubt that we will continue to grow from strength to strength. Now call on Andrew to go through the financial results. Andrew.